To introduce Ron Jorgensen, Fellow of the Institute, to deliver this session on unpaid present entitlements. Ron is a principal of Harwood Andrews Lawyers and primarily consults on the federal and state revenue laws and revenue litigation. Ron also advises in respect of business restructuring, tax-sensitive commercial transactions and property developments. He is a member of numerous technical and advisory taxation committees with the Taxation Institute and the Law Institute of Victoria. He holds a Master's of Laws practising in taxation and is a Law Institute of Victoria accredited specialist in tax law. So please welcome Ron.
Good afternoon all. I was asked to present the red wine experiment this year. Essentially, we're trying to work out whether Cabernet Sauvignon will improve comprehension of the rulings that the Commission has put out in respect of unpaid present entitlements. Now, not only are we sort of deciding whether we can improve comprehension, but whether we actually improve in acceptance of his views. What we did was we tried to test against a number of issues. We tried to look at the controversial aspects of the Commissioner's views. I'll touch upon those as we go through it. I won't do all of them. You have the compendium, which is a very lengthy document from the consultation process. So I'll just try and look at those aspects that I think need more work from the Commissioner, or you need to be aware of when you're trying to work through the actual application, particularly of the PSLA. We'll look at what's going to occur or how you need to deal with pre-16 December 2009 UPEs and post-16 December 2009 UPEs. I think there's going to be a reasonable amount of refinement of how we deal with minutes and things like that to try and make sure that we fall either within the PSLA or we try and get out of the entire PSLA process. And we'll look at a number of options for that. We'll also have a look at how they will impact upon drafting trust deeds, where there's anything we need to look at. I note that Mr Slater had particular views about how income worked and what you could actually do with the trust deed. We, I guess, approach it from a fairly conservative point of view, that we'll try and work within the current structure and the uncertainties, particularly the way you'll deal with resolutions and also how the Commissioner expects you to deal with accounts and some of the other options you might have with accounts. One of the, I guess, difficult areas, particularly as a lawyer, is trying to work out how we deal with these matters when we're trying to draft the investment agreements or how we will in fact try and administer them. Principally to preserve the position should a test case be successful and show that the ATO position is unmaintainable. One of the problems we foresee is people are jumping onto the PSLA, onto option 1 and option 2, and tying their clients into a position where they can't get out of should there be a decision adverse to the Commissioner. We'll also look at the corrective options, both under the PSLA and generally under 109RB, and then we'll go through a number of structuring options. The structuring options will just be put out there as things to consider. Of course, there's Part 4A and whether they suit the height, weight, and all those other things we need to consider according to Graham Cooper. If we go and, I'll go through the paper, those that wish to follow, and I'm now just moving on to a general summary on page 4 of how the Commissioner's views work. I'm not going to delve to a great extent into Division 7A itself. I've assumed you understand and have a really good working knowledge of that, but just really looking at the Commissioner's changes. The Commissioner draws this distinction between ordinary loans and this concept of extended definition loans, principally coming out of the idea that a financial accommodation in certain circumstances can become a loan. If we look at just the Commissioner's view on what ordinary loans, what he calls Section 2 loans, looking at this process of a trust makes a distribution to a private company, the question is whether that unpaid present entitlement will be deemed to be an ordinary loan. Now, where you refer to it as a loan in the accounts and under the trust deed, then I don't think there's really much of an issue there. unless you can establish that the expressed agreement that you've entered into was wrong for some